Hello and welcome back to the High Altitude Investing live stream. Today is the 20th of June, and I'm excited to be doing a live stream with you guys and talking about crypto as always, and what could be coming for the markets, and especially why most people will fail in the crypto markets, why a lot of people will not succeed, and how to avoid the common traps, the psychology that you guys need to make the most money, because I know everybody wants to make money in these markets and come out of this cycle profitable and on top. So it's going to be a good live stream today. Excited to be streaming and talking about the markets. Welcome everybody. Thank you for tuning in. And we'll go ahead and get started on Bitcoin. So Bitcoin has been pretty choppy. Bitcoin has been especially choppy ever since really December of last year. We had a downtrend right here, but even in this little downtrend that we formed on Bitcoin, you can see just how choppy Bitcoin was. I mean, it would go up and get chopped back down and back up, and it was very, very choppy in this area. Also very choppy in this area as well. And you can see that currently we had less choppiness on the uptrend right here, but you can see currently we've had a lot of chop on Bitcoin. So that's actually one of the main things that will screw up a lot of people in the crypto markets, is just how choppy crypto can be sometimes, especially during periods of reaccumulation before returning to uptrends. There's going to be a lot of chop, a lot of people getting shaken up in the market, a lot of people panic selling because one day it's down 5% and the next day it's up, and they're just getting chopped in the market. So that's going to be one of the big things that people throughout this crypto cycle, a lot of people will get screwed up trying to trade smaller time frames, trying to predict price action on those smaller time frames and getting chopped up as a result of them doing that. Charts chasers, what is up, my friend? Thank you for tuning in to today's live stream. And yeah, we're going to talk a little bit about the bars pattern tool and the gone box in today's stream as you requested in the Discord. But first, let's talk a little bit about Bitcoin. So let's drop time frame. Normally I never go down to these smaller time frames, but today I feel that it's necessary to talk a little bit about the choppiness on Bitcoin. So you can see Bitcoin did have a pretty big panic right here on the 15-minute candlesticks. And this goes to show just how choppy the market can be. I mean, just yesterday, Bitcoin was going up and everybody was all excited, and it looked like it was going to go breaking out for more upside. And today we came all the way back down to major horizontal support. So that's a perfect example of the choppiness in the crypto markets. And another example of this is over here as well. You can see the Bitcoin market started to recover. The price of Bitcoin went all the way up to 108,000, and then it was just brought right back down to major support. Just chopped all the way back down. So that's going to happen a lot in the crypto markets. Even if you zoom in to the smaller time frames, you can see the same thing is happening on these smaller time frames. Like if we were to look at the 1 minute right here, we're going to stay on the 15-minute because then I'd have to zoom the chart in a little bit more. But you can see how the market is pumping and then pulling right back down to support and just chopping all around. So that's very, very typical of all markets to have choppiness. The reason that it happens is because of all of the people that are trying to trade the smaller time frame. All of those people, they get chopped up. They think, oh, look, the market looks like a good place to buy. I'm going to buy right here. And then it goes lower. And that's just the nature of the market. The market is designed to go to major liquidity areas and to get people really excited, so they all FOMO into the market, only to screw all of those people, liquidate a bunch of orders. You have to understand that people are trading these markets with really, really high leverage. And a lot of people are trying to trade these markets on smaller time frames. And so as a result of that, a lot of people, they end up going leverage long up here with really high leverage, seeing that there was a breakout and thinking, oh, this is going to go higher. But the market is designed to screw people. It's designed to basically wreck everybody that doesn't keep a level head and that isn't patient and that is trying to make money too quickly or with too much vigor, too much leverage, too much excitement. And it's just the way markets are. Even on the bigger time frames, it does the exact same thing. Like here on Bitcoin in 2019 and 2020, you can see Bitcoin had this strong recovery here, came all the way back down to this major support level, looked like it was going to break out and go for this super high parabolic run, and then the market comes all the way back down and chops everybody out of the market, screwed everybody up. And yeah, you can say, oh, well, COVID happened right here, but this is actually just the way markets move. Markets do this. That's why every single time there's a breakout and everybody gets really excited, it has to have a healthy correction, because the market is designed to screw people over. It's designed to chop people out of the market. And the more that you can exercise patience and the more that you can exercise a level head and emotional resilience, the more profitable you're going to be, because the market is going to continually create scenarios where you have to practice patience, waiting for the recovery, and where you have to keep a level head because it pulled back and everybody's afraid and they think it's going to go lower. But what's interesting about this choppiness is just like how when it pumps right here, it has to pull back and chop everybody out of the market. Well, when it pulls back, the market has to chop back up in the other direction. And that's why everybody panic sells down here. They get afraid, and then the market chops right back up on the bullish side of things. So if you get a strong panic sell, the natural inclination of human psychology is to freak out and to flip bearish and to think, oh, look, we just rejected right here. The market's going to go lower. It's clearly downtrending. People start to think in terms of the market crashing. And a lot of times what can happen is the market can chop right back up on the upside. And everybody that thought, oh, it's clearly going down, all the same people that were going long up here are the same people going short down here, expecting more downside. Now, I'm not going to try to predict the 15-minute time frame. The higher time frames are way easier to predict, and if you're smart, and I know a lot of you guys are, and a lot of you guys are actually really intelligent people, then you're going to avoid trying to predict smaller time frames. But what I will say is that a lot of times when something like this happens, the market will chop back up in the other direction. But if you're smart, if you're intelligent, and I know a lot of you guys are, you're going to want to trade these bigger time frames like the daily, the 5-day, 4-day, 5-day, 8-day, 10-day, 15-day. A lot of time frames that most people are not looking at, because everybody gets so focused on short-term gains. Everybody's thinking in terms of how can I make money in the next 24 hours, that very few people are zooming out and looking at the bigger time frames, and very few people are focused on what's happening in those bigger time frames, and that's why they're left profitless. That's why they can turn a $10,000 account into $100, because they're trying to trade all these smaller time frames and they're getting chopped up like crazy. The bigger time frame has choppiness still, but it's greatly reduced. It's generally, in the bigger time frame, generally what you see is a nice, steady, consistent uptrend, followed by a nice, steady, consistent downtrend, followed by a nice, steady, consistent uptrend, followed by a nice, steady, consistent downtrend. So there's a lot more uniformness in the market. I don't know if that's a word. A lot more uniformity. I don't know what word to use there. The market is much more uniform and consistent in the bigger time frame. There's a lot less choppiness. Yes, there's corrections. Yes, there's pumps, but there isn't just choppiness. It's so crazy and so unpredictable. That's why if you look at all of the biggest traders on Wall Street, and I've studied the way that these people trade markets, these guys focus on the bigger time frame. They're focused on bigger, longer term moves, because that's where they're able to consistently predict the market and make money in an easy way, where you don't have to be panicking and freaking out and stressing out about all of the movement up and down. In the bigger picture, you're able to see things as they are clearly. And that's why most of the biggest and the best traders in the world trade the bigger time frames, or they have a very, very, very strict strategy for day trading on smaller time frames. And they have safeguards to prevent them from getting chopped up. But for the most part, they focus on the bigger time frames. And really, they're only taking trades on smaller time frames if the opportunity is just stupid good. Like if the market falls like 15% in a very short period of time, they might go long because it's just so obvious that people are panicking. So focus on the bigger time frames. That's why a few people will succeed in the crypto markets this cycle, is because a lot of people will be way too focused on today. They'll be too focused on right here, right now. And because of that, they're going to make a lot of really bad decisions trying to outsmart the market instead of just working with what's easy to do. Trading can be easy. Investing can be easy if you're zoomed out. That's 100% true. Alex W., can you please look at platinum? Yeah, we can look at platinum today. Tom, hi Dallin. Hey Tom, thank you for tuning in, man. Kespin73, can you look at cubic? Yes, we can. Paul, what is up, my friend? Good to see you tuning in. Paul is a fellow one-on-one coaching member. He's very cool. So thank you for tuning in to today's live stream. Super fun to talk to. He's a really, really good guy. Octahedron. Hey, Dallin. Hey, what is up, Octahedron? Thank you for tuning in to today's live stream. So, anyways, essentially, to sum up what I'm talking about, people get chopped up on smaller time frames. Very common to do. Huge mistake, very common beginner mistake, and it's a big one too, is to try to trade those smaller time frames. To avoid it, the answer, you guys know the answer. All you have to do is zoom out. Focus on the daily, focus on the weekly. If you have TradingView Pro, check out the 5-day, the 4-day, the 3-day, the 2-day, the 8-day, the 10-day, the 15-day. But if you don't, just focus on the weekly, the daily. Those bigger time frames are going to be way more helpful. And yeah, you'll have to see your portfolio go up 30% and then down 20% and then up 100% and then down 50%. You're going to have to watch your portfolio see some pretty big swings. But if you're focused on the bigger time frames, wherever there's a clear panic, you can buy more. Why do you think I was so bullish on Bitcoin down here at 75K or Bitcoin down here at 52K? Because in the bigger time frame, people were clearly panicking, and it's super easy to see. So to avoid that beginner mistake, zoom out. Very easy to do, and it's a huge, huge safeguard against getting chopped up in the market, which most people do. It's crazy how quickly somebody will put their money into USDT. Oh, we're down on the daily. Like even today, look at Bitcoin. Bitcoin is down what? Like maybe 1% or something. But because on the daily candlesticks, it looks like it's rejecting, a whole bunch of people are putting their money into the dollar. It's down 1%, you guys. Like, it's crazy how fast people will panic sell. It's better to hold through a correction than to panic sell, because a lot of times those corrections will end sooner than you think. Down here, when Bitcoin hit 50K, right here, 52, 50K, whatever, everybody was calling for 30K. Now, holding through the correction sucked still. It would have been better to take profits up here. But if you held through the correction and you just keep holding, you end up doing better than all the people that freak out and try to sell to try to buy more at 30K. Those people got screwed. So just hold on. Hold on. A lot of people don't know the power of holding. You have no idea how much money you can make just holding on. With altcoins, they definitely have bigger, more sustained and brutal corrections than Bitcoin does, and a lot more of them die. So with altcoins, you want to take more profits when they're going parabolic. But with Bitcoin and with Ethereum and any coin that's really established, holding on ends up being a better play than trying to predict time. That's why you'll hear professionals all the time, they'll say time in the markets is better than timing the markets, right? So it's better to have time in the markets than to try to time the markets. Way, way better to just hold on, stay true to your analysis, and let this thing ride. I've been in Bitcoin. I first got into Bitcoin in 2015. And just watching the market move, yeah, it's had some pretty big corrections, 80% plus corrections. But just look at this thing over time. It's worth $104,000. And in 2015, when I first bought my first Bitcoin, it was around $200. I don't remember the exact price, but it was in this dip right here. It was like really close to the $200 that day when I bought my first Bitcoin on Coinbase. And it's worth $104,000 now. So that goes to show time in the market versus timing the market. And that's not to say that you don't take a good opportunity when it presents itself to go short or to go long or to play a good opportunity when you have a clear setup. But that is to say that if you're holding in the market and you're holding good projects, over time you're going to make money. The markets are a game of patience. Most people in this world are not patient. So cool, enough about Bitcoin and all of that stuff. Let's talk a little bit about the coins that you guys are requesting. I'm also going to go into how to use the bars pattern tool as requested by charts chasers, and a little bit about how to use the gone box as well, the gone square box, whatever you want to call it. Gone box. So let's talk about platinum. It's fun to talk about precious metals. I love you guys, especially when you ask me to do analysis on stuff like silver, gold, and crypto too. I love doing analysis for everything for you guys. But it's really cool when you ask about different things, because it presents an opportunity for me to show how technical analysis is a universal thing. It's not something, all of the principles that you can learn. If you want to learn how to trade and invest, you don't have to go look up trading and investing videos that are specific to crypto, although it is helpful to study people that trade crypto because they're going to know some stuff that's a little bit different. But overall, it's pretty much the same across the board. You can go look at Forex trading videos and learn a lot about crypto because it's universal principles. Platinum, man, look how good this looks. The Elliott wave, the bigger picture Elliott wave, is very easy to see. If we're on the 5-month candlesticks, which we are, you can see, you can measure wave 1, wave 2, wave 3, wave 4, and wave 5 is coming in this market. Let's go for a super cycle. And you can see what's happening for silver is an L8 wave structure. We've already done wave 1 and wave 2 that happened between 1994 and 2020. We made wave 1 and wave 2 over a long period of 20 years, right? Over 20 years to form wave 1 and wave 2. And we're just now starting to break out for wave 3. So this is really the same thing that silver's been doing too, if you've been looking at silver. Silver did the exact same thing. We did a big wave 1 and wave 2 on silver. And let's go to the 5 months so you can see the same structure on the same time frame. So silver did wave 1 and wave 2 as well. So this is why commodity markets, I always tell people when they ask me, should I invest in silver? Should I invest in platinum? Should I invest in gold? My answer is always yes. It's always yes. And do you guys want to make money? Because to make money easily, all you have to do is go find something in the big picture that did wave 2 and buy it. Especially something that has some degree of real world value. Whenever you're doing longer term investing, generally you don't go for stuff that's a total meme coin that just has, that's on deck screener and pump.fun and everybody's buying some meme coin. If you're investing in good commodities, good stocks, good cryptos, and you zoom out on the bigger picture, find something that's in wave 2 or wave 4 and just buy it. If you guys want to make money, that's really the simplest, most powerful strategy. And when it comes to platinum, when it comes to silver, both of these commodities are primed for wave 3. And if you thought that the run back here in 2006 was exciting, imagine how big wave 3 is going to be, because wave 3 is always bigger than wave 1. It's always going to be bigger than wave 1. So yeah, platinum looks really good. Let's check out Cubic. I think you had me do analysis on this maybe last live stream or a couple live streams ago, something like that. This does look really good to me. So one of the first things that I see is a falling wedge pattern here. So we have a big wedge in the market. We broke bullish out of this wedge. We had a double bottom right here. We broke bullish out of the double bottom. We even broke above the neckline of the double bottom, and we came back down, and now we're consolidating on that neckline. So it's pretty typical for the market to do this kind of movement. And now what you'd expect is a push up towards resistance up here. First of all, as a result of the breakout of this falling wedge, but also as a result of the double bottom breakout. So this double bottom pattern right here for Cubic, I think that's how you say that. We broke bullish out of the double bottom pattern. We broke above the neckline. So that means we do have a minimum target for the double bottom. The minimum target for the double bottom is 0.0000025. 225 is the minimum target for the double bottom. But most of the time you do exceed, because a double bottom signifies a reversal. So a lot of times when you get a double bottom pattern like this, you will get continuation significantly past the minimum target, because it signifies the reversal of the trend. And a lot of people are going to miss the profit in the crypto markets because of the fact that a lot of people are focused on world events. There's going to be a lot of people out there focused on World War III, focused on outside events. And that's where they're going to be thinking the majority of the time is, oh, what's going to happen because of these outside events? But if you look at the charts, like Cubic here, Cubic looks ready for a bullish reversal. But if you read the news, you're probably going to freak out and sell all your crypto, just because of the stuff that's happening in the world. And I'm here to tell you that if you're always worried about outside events, you're never going to make any money, ever. You're going to end up being really, really lost in the markets and not know what to do. Because let me tell you, and this should be no surprise to you guys, there's always something bad happening in the world. There's always good stuff happening too, but for some reason that never makes the headlines on the news. But there's always going to be something that's happening that makes people afraid, that makes people think that the world is ending, that global chaos is at an all-time high, and that you need to sell your stocks. But I'm here to tell you that crypto went parabolic during a global pandemic. It dumped like 50% for 1 month when the pandemic first hit in 2020, March of 2020. But then the price of everything went nuts in the midst of a global pandemic. So if you're worried about outside events, your focus is in the wrong place. Your focus should be on the charts. Your focus should be on what utility does this stuff have. Your focus should be on how can you keep a level head and make the most money. Can you look at QNT? QNT. Let's go to not the 5 month. Let's see if we can go to like the 4-day. Let's pull this chart up on charts.cointrader. So if you ever don't have all of the historical data because TradingView pulls from specific exchanges, charts.cointrader.pro is kind of this free hack that you can use to get all of the historical data, because it pulls from CoinMarketCap, so it compiles all of the different exchanges together and gives you the full picture, all of the historical data. And with QNT, you can get that really easily here on charts.cointrader.pro. And actually, QNT is a perfect repeat of the NASDAQ during the internet bubble. So this is a big, big buy in my book because of the fact that this is a perfect market cycle. Like if you've ever studied market cycles and you know what they do, and you look at QNT, you're thinking, man, this is the juiciest, best buying opportunity I've seen in a long time. Look at the NASDAQ during the internet bubble. So here's the internet bubble on the IXIC, the NASDAQ Composite Index. And the reason I say that is because there's another thing that's called the NQ or the NDX, and that's different than the NASDAQ Composite Index. Two different indices, right? So the IXIC, the NASDAQ Composite Index, this is the internet bubble right here. This is the internet bubble pop, and this is the double bottom, the subsequent double bottom here in 2003 and in 2008. And if you look over here at Quant, tell me that's not the exact same thing. Because it is. It's the exact same thing happening all over again in a whole different industry, a whole different sector, whatever you want to call it, but the same human emotion playing out in the charts. Crypto bubble in 2021, crypto bubble pop, double bottom pattern, and the early signs of a recovery happening right now for Quant. It's the exact same thing. That's what a market cycle does. And by the way, the double bottom can be different sizes. So here's a parabolic run. Then you have your correction. The double bottom can be like this, where it's almost invisible, and then it recovers and goes up like this. Or the double bottom can be pronounced, where you have a big double bottom like that, and then it breaks out again. But there's always going to be some type of bottoming structure before the market recovers and goes for another run. And that's what you see here with quant. You see that with QNT. Parabolic run, crash, double bottom, and a recovery is coming for this market just in the same way that it did here with the NASDAQ. And look at that recovery. You can talk about the internet bubble all day, but if you want to be one of the few people that succeeds in the crypto markets instead of all of the people that are going to fail, you guys got to focus on the fact that look what happened after the internet bubble popped. After the internet bubble popped, we had a full-blown bull market. And the same thing is coming for the crypto markets. So that's my view on QNT. We are going to have a parabolic run for this coin. It's very, very likely, I should say, that we have one. Tell us when this bull market will get an end. Don't tell us time frame, not price. I guess you just mean to give you a general idea of when the bull market could end. So let's take a look at some things here. Let's keep a level head and see what could happen here for the crypto markets. And by the way, the crypto markets have a 90% correlation to the stock market. All of the people that want to say that crypto is somehow separate from the stock market, there's a 90% correlation. Now, correlation does not mean causation. So correlation can change. Maybe 20, 30 years from now or 5 years from now, there is no correlation between the stock market and crypto. But for now, there's a 90% correlation between the stock market and crypto. So the first thing you need to understand if you want to understand when crypto could top out isn't the 4-year cycle. It isn't the halving. It isn't all of the stuff that all of the beginners look at. If you want to understand when crypto could top out, you need to understand the context of the stock market and what's going on in the stock market. And this is completely different than what everybody in the whole crypto world will tell you. Why? Because most people are blind and ignorant. It's just the truth. But if you really want to understand what's going on in crypto, you have to understand what's going on in the stock market. The reason we have such a crazy environment in the world of crypto is because we have a crazy environment in the world of stocks. And if you look at the Dow Jones and you take a look at what's happening here with the Dow Jones, you have to understand that the Dow is on a 100-year cycle. So if you look at the Dow and you put it on the log chart here, we had a Great Depression that started in 1929. That's when the Great Depression started. Now the stock market is on a 100-year cycle. So the next Great Depression is set up to happen in the next few years. By 2029, that's really where the next Great Depression is set up to take place, because we're in a 100-year bull market for the stock market. So if you want to understand roughly what time frame crypto could top out at, be thinking in terms of when is the stock market going to top out because of the 90% correlation to the crypto markets. That's really where your focus should be, not on the 4-year cycle. Because by the way, if you stop looking at the 4-year cycle and you look at the stock cycles, crypto follows the stock cycles way closer than it does the 4-year cycle. There's times when Bitcoin didn't even do a 4-year cycle. And I know it's only been around since 2009 or 10 or whatever. 2009, I think. But if you look at the cycles, the first cycle on Bitcoin ever was not a 4-year cycle. It was following the stock market. It wasn't following the 4-year cycle. It wasn't following the halving. It was following the stock market. And that's what it's been doing this entire time. And I know this is completely contrary to what everybody believes, but why do you think everybody gets screwed every time? Because they're looking at the wrong thing. That's why. If you look at Bitcoin, and let's pull up the daily candlesticks here, or actually let's even go to like the 8-day for Bitcoin. And let's pull up the 8-day on the Dow Jones, and we'll line up 2015 over here with 2015 on Bitcoin. So here's 2015 on the Dow Jones, and here's 2015 on Bitcoin. Now, if you look at what happened right here in 2018, look what happened to Bitcoin in 2018. The stock market had a crash in 2018. So did Bitcoin. Look what happened to Bitcoin right here in 2020. Look what happened to the stock market in 2020. They both fell like 50%. Look what happened to Bitcoin right here in 2021. Look what happened to the stock market in 2022, on Bitcoin. And look what happened to the stock market in 2022. Look what happened to the stock market here in 2025. Look what happened to Bitcoin right here in 2025. I'm telling you, Bitcoin follows the stock market way better than it follows any other paradigm that people are using to try to predict Bitcoin. So if you want to understand what's happening to the crypto markets in terms of time frames, you got to understand what's happening to the stock market. This is why I believe Bitcoin will be going for a parabolic run to who knows how high, 500K, 600K. Maybe it only gets to 250,000. I think that's pretty unlikely. That's my lowest target for this cycle. But I believe by 2029, Bitcoin could be worth 500K, 600K. Not because it's following the 4-year cycle, because it's not if you study the cycles. Not because it's following the halving, but because it's following the stock market. That's why. And the stock market is set up to rally from now until 2029. And let me show you the fractal to kind of bring my my point home here, to show you guys what I mean. So let's pull up a different time frame here on Bitcoin. And we're going to take a look at the 2017 bull market here for Bitcoin and show you how what happened in 2017 is really a repeat of what's happening to the stock market today. Markets are fractal in nature, and the same patterns appear across all markets and all time frames. It's why you get the same setups over and over again, because they're fractal in nature. So if you look right here, this is the early day Dow Jones, okay? Early day in terms of this cycle. Obviously, the Dow goes all the way back, way before this period right here. But for this cycle, this is the early day Dow Jones, right? And if you look right here, look what happened to Bitcoin in 2017. That's the exact same market structure. This is called the first sell-off. This happens in every single cycle. Every cycle always has a first sell-off before it goes parabolic. So we have our first sell-off over here on the Dow Jones, and we have our first sell-off over here on Bitcoin. Then you get what's called a midway cool-off. So halfway up the cycle, the market has to cool off. That's what happened right here on Bitcoin when Bitcoin went from $8,000 per coin down to $5,700 per coin. That's also what happened to the Dow Jones during March of 2020 when we had the COVID drop. That was the midway cool-off, which everybody thought was the top because everybody wants to be all cool and try to call the top on the stock market and say that they were the guy that figured out the top, and it wasn't the top. it fully recovered and actually went up during the pandemic. It only crashed March of 2020 for 1 month. Then look what happened to the Dow Jones, a full recovery. Why? Because that was the midway cool-off. Not the top, it was the midway cool-off of the cycle. Now look what happened to Bitcoin right here. When Bitcoin hit 10,000 per coin, Bitcoin had to pull all the way back to 8,600 per coin. So there was another shakeout right here. And you can really map this out with the shakeout that we just barely had on the stock market. It's the same shakeout. So here's another shakeout before the major parabolic run that happened on Bitcoin right here, where it went to 20,000 per coin, had a blow off top. That's what that's called. Uh-oh. There we go. Turned off my light. This is called a blow off top right here. So that's the final parabolic run before a market cycle tops out. It's called a blow off top. And you can see that that last shakeout right here happened before the blow off top on Bitcoin. And if you look at the Dow Jones, we're set up for a blow off top on the Dow Jones. And in between now and 2029, the Dow Jones is really set up to go parabolic, to go vertical. And this is completely contrary to what you're going to hear on the news, what you're going to hear by most average people. Even crypto people are trying to call it top on the stock market and say that crypto is just going to magically run up when crypto has a 90% correlation to the stock market. And that's not going to change overnight. And I believe in crypto, and I believe that someday it will even replace the stock market because everything will be put on the blockchain, even stocks. Well, I guess I should just say the stock market will become a blockchain. But overall, it has a 90% correlation to the stock market, and that's not going to change overnight. So this is completely contrary to what you're hearing in the news with World War III is starting, sell all your stocks, sell all your crypto, sell everything. And this is completely contrary to what you're hearing even from crypto people that say the top of the stock market is somehow magically in, even though that's completely contrary to what we see from a fractal, a market cycle, and a major cycle perspective with a 100-year bull market. This is completely contrary to all of those things, but this is what I believe to be the truth. The stock market, the Dow Jones, will go parabolic in between now and 2030 and go all the way to, it could hit 70,000 per Dow Jones, per share of the Dow Jones before it tops out. Now, is it going to go up forever? No, look how parabolic it's already gone. Look how brutal the Bitcoin bull market was bear market was in 2018 after the bull market in 2017. So I'm not sitting here telling you guys the stock market's going to go up forever. You'd have to be crazy to think that. We are in a massive bubble right now. But is this the top of the bubble? Is this really where all of that momentum just stops? No, we have not had a parabolic blow off top. And chances are we're going to go down really hard, but first we have to go up. First we have to go higher than what most people expect. FOMO is real, even for the stock market. So when it comes to crypto, to answer your question, AJ, I know I've gone really long on just your question alone, but I felt it was important to answer your question. The crypto markets should top out the same time the stock market tops out. It has a 90% correlation. Better than the 4-year cycle, better than looking at the halving. Look at the stock market cycle. The stock market is set up to top out by 2029 for a Great Depression 2.0. So definitely be thinking about crypto rallying during the parabolic run on stocks. And then when the stock market tops out, I hate to say this, but during a bear market, nothing goes up. The Great Depression was called a depression for a reason. the value of stuff went to zero. Everything crashed. So there could be some cryptos. There's always like a couple outliers, like a couple stocks that are outliers that will go up during depressions. And there's going to be some cryptos that are outliers that could go up a little bit. But 95% of everything is going to follow the world markets, because the world markets have the biggest sway on the world economy. And if the world economy is doing bad, it doesn't matter what it is, it's going to go down, because the world economy is not good. So that's my answer to your question, AJ. Tiger King, what is up, my friend? Thank you for tuning in. Now let's go ahead and run over all of the requested coins, because I went into a very long rant about the crypto markets and cycle timing. So let's see if I can cover some of your coins that you're requesting in the chat now. LTCN, Grayscale Litecoin Trust. Really, you asked me to do analysis on this recently. And actually, my view on this is exactly the same as it was before. We're in wave 1 and wave 2, and we're really getting ready for wave 3 here on Grayscale's Litecoin Trust. I expect a double bottom on this stock very soon. We're starting to form a double bottom pattern here, with our first low right here and our secondary low right here. So a double bottom breakout should happen soon, and we should start to go for wave 3. And you can see, if we take off our Elliott waves here, you can see that we completed a full market cycle here. This actually, funny enough, this actually kind of looks like SEI, that I posted a chart on my Twitter, and I'll show you the similarities. But we have wave 1, wave 2, wave 3, wave 4, wave 5, right? This looks a lot like C that I posted on my X account. And then we have our ABC correction down. So this is a complete Elliott wave cycle. We're looking for a bigger picture wave 3 coming out of this soon. So 1, 2, and wave 3 will happen soon for this stock, along with the parabolic run that's coming on crypto. Litecoin, Grayscale Litecoin Trust is not going to be left behind for that. And actually, to kind of bring home my point about market cycles, look how similar this is to even Bitcoin over here in 2017 and 2018. I'm telling you guys, market cycles and markets are fractal in nature, and they repeat across all markets and all time frames, and it doesn't matter what industry you're looking at, you're going to see the same human emotion appearing over and over again. Let's pull up C here. Do you guys see the similarities? I know that's a really bad joke, but I didn't know SEI was pronounced C. It's kind of cool. I learned that not that long ago, actually. I'm embarrassed to say, but SEI is pronounced C. So, but you can see wave 1, wave 2, wave 3, wave 4, wave 5, and our ABC correction. Now, the reason I'm comparing these two together is a lot of times your A wave isn't as big as this. Like a lot of times when you see an ABC correction, it's actually the B wave that most of the time is bigger. But sometimes, and this happens fairly frequently, but not all the time, it's more common to see the other way, but sometimes wave A is actually longer than wave B or wave C. It's just a little bit of a different way that the ABC correction can happen, and that's what we see with both of these charts. So you can see that C over here is starting to double bottom, wave 1, wave 2, and a smaller Elliott wave. And we're starting to see the early signs of a double bottom here, and I believe we'll start to see the early signs of a double bottom here with Grayscale Litecoin Trust soon as well. Can you do the XMR chart? Yes, I'll be happy to cover XMR. XMR is one of the coolest cryptos ever. So thank you for bringing it up, because really XMR represents what crypto should be in a lot of ways, where people should have privacy over their money. I believe in paying taxes. I believe in supporting your government. But I also believe that money shouldn't be centralized and controlled. And XMR is a great example of how we should have privacy, just like how nobody should be looking at our text messages on our phones, not because we're saying stuff we shouldn't be, but because privacy is something that should be fundamental, and I believe it's essential to humanity. Nobody would want cameras in their bedrooms that anybody can look at all times. It's just not right. So I believe privacy is something that's essential. And XMR is really cool because it's one of the earliest privacy coins. And it's actually really cool. Like, it's developed in a really cool way. So let's pull up the XMR chart if I can find it here. XMR on Bitfinex. This will work fine. And you can see that there's a lot of buying pressure for XMR. It's actually been rallying recently. A little bit of a sell-off right here, but overall this has been had a lot of buying pressure recently for, the past, basically all through 2024. Look how strong that rally was on XMR. And I'd been posting in my VIP to buy XMR even down right here, letting people know I saw some big things coming for this coin. And you can see that with XMR, we have one of the biggest cup and handle patterns I've ever seen in my entire life. It's actually a lot like silver. If you don't know, silver did a huge cup and handle pattern in the bigger picture, and it's set up for an astronomical pump. I believe silver will blow people away. And I believe in silver too as a strong investment, because silver is one of those investments that always will have a use. It's never going to stop being useful. Even if we go into the space age and people are mining silver off asteroids and we have an abundance of it, it's still going to be useful. So over the long term, silver is a really good investment. And if you look at silver over here on the right and XMR over here on the left, you can see that that's a massive cup and handle on silver right here. Huge cup and handle pattern that's going to go nuts. This thing is going to go crazy. We've already started to see the early signs of that. That cup and handle pattern that's set up for some pretty gnarly vertical movement. And Monero XMR is the same pattern. Big, huge cup and handle pattern. Already starting to see the recovery. Imagine what can happen when silver and when XMR break above their old all-time highs right here. It's going to be nuts. People are going to be blown away by both silver and XMR. So that's kind of my view on XMR. Light Clothed, what is up, my friend? Thank you for tuning in. XLM, yeah, let's talk about good old Stellar Lumens. This coin will always be near and dear to my heart because I invested in this coin in 2017 during the bear market, the summer correction, where everybody sold their XMR, everybody sold their XLM, everybody sold their altcoins during the 2017 summer bear market. But I bought some XLM at the bottom, and I think I only put maybe 2,000 or 3,000 in, and I made $55,000 when it pumped. It was so crazy. Super, super fun. So Stellar Lumens is always going to be near and dear to my heart because it's one of those early coins that I invested early on in my career. 2017 was my first massive bull market for crypto, and I made pretty good money on it. I don't think it was the most profitable coin that I held. I'm pretty sure Bitcoin ended up being the most profitable coin that I held in 2017. But it ended up being, at least in terms of dollar amount, I made the most on Bitcoin. But in terms of percentage gain, XLM was up there. I made a huge percentage gain on XLM. So it's always going to be a coin that I really fundamentally, I like it. It's just cool. So let's pull up a chart for XLM where we have all of the historical data, because you don't get that on Bitfinex. So let's go back over to charts.cointrader and pull up XLM here. So here on charts.cointrader, you can see the whole parabolic run. And by the way, here's that run that I was talking about where I made that money. So in 2017, there was a correction on altcoins. Everybody sold. Everybody was freaking out. But the one thing that very few people did was buy the dip. But I put like $2,000 or $3,000 in on XLM down here. The pump that came afterwards blew my mind. It was insane. But very few people got to profit on that pump because most people sold. But if you bought the dip, you made a bunch of money on that pump that came afterwards. But very few people did that. Most people bought up here at the top. Most people waited. They panic sold and they waited, and it went parabolic and they missed out. But that pump right here in 2017 made me a bunch of money, and it was super fun. And by the way, one of my VIP members still remember to this day, because he had lost some money because this crazy thing happened in my business where essentially he got hacked and this crazy stuff happened anyways. Long story. But long story short, he had lost maybe $300,000 from a hack from somebody in my Discord. It was super unfortunate, really sad. And I had been talking to him on the phone and trying to help him, encourage him and everything. But he invested some money in XLM down here, and he ended up making $2.6 million on a single trade. This guy had a lot of money, but he ended up making over $2 million on a single trade on Stellar Lumens right there in 2017. So another reason I like this coin. So anyways, to get into analysis instead of telling stories here, you can see that here with Stellar Lumens, we do have a very typical accumulation pattern. And actually, if we go back over to Coinbase, where we do have all of the historical data on TradingView, and we compare it, and I know I've shown you guys this many times, but it's still true today. So, still something to look at, still something to pay attention to. Stellar Lumens could be set up for something insane, like just very, very, very vertical in nature. Here is NVIDIA. So here would be the internet bubble. Here is kind of another bubble pre-2008 when the NASDAQ was double bottoming right here. And this ended up being a big accumulation pattern during the internet bubble right here, and then another bubble that happened right before 2008. That formed a multi-year accumulation pattern for NVIDIA. And what's kind of interesting is how a lot of altcoins, including Stellar Lumens, have done these multi-year accumulation patterns. And the fruition of this pattern could be, and what I believe will happen from now until 2029, is a very vertical move as crypto kind of goes into a more mass adoption type cycle, and we break out of these pump and dumps that we've been seeing into more of a sustained bull market that lasts all the way till 2029. And that's really what XLM is set up to do, is a parabolic run between now and 2029 as crypto continues to follow the stock market with over a 90% correlation. Okay, we're almost an hour in. So I'll probably do one more and call it a day because I got some stuff to do today. Jesus says no more alt season for a long time. So that could definitely be, it's really easy to think that during times of a correction right now. And I agree with you, it can be really hard to see that an altcoin bull market can happen, especially if maybe you haven't seen all of the crypto cycles and what's happened. But what I'd want you to consider is just the fact that crypto really is set up for something big. All of the bigger picture patterns are still perfectly set up, and we're really ready for some parabolic movement in this market. So just consider that, because it's easy to get thinking in the short term and to be focused on the here and now and what's happening on the news. And I just invite you to take a look at what's going on with crypto as an industry in the bigger picture and reconsider your position on no altcoin season happening, because we're set up for some big things. So, do you think GVTS will ban privacy coins? No, I don't. Great analysis, by the way, stopping by whenever I can. Hey, thank you, Matt. What about Gone Box and bar pattern? You know, charts chasers, I'm so glad you brought that up, because I got flowing on all these charts and requests and totally forgot to teach you about those things. So let's talk about that. Actually, we'll pull this back up, and we'll start with the bars pattern. So the bars pattern is generally used to share fractals. So if we take the bars pattern tool over here on the left, it's like the fourth one down, and let's measure the NVIDIA accumulation, okay? And I'm going to just take this whole accumulation pattern right here and measure it. Then I'll press Control-C and Control-V it. Now look what happens if we take these two charts and we measure them. Can you see how the bars pattern tool is useful for comparing market cycles and looking at the similarities between cycles? So that's something that bars pattern tool is useful for. It's also useful if you want to show people what could happen in the market. You can use the bars pattern tool to grab a section of one coin and place it on top of another coin, and you can show people where you think the market's going to go by using the bars pattern tool. So it's used for fractal analysis to compare fractals together, just like how I was talking about with the Dow Jones earlier and comparing the Dow Jones to Bitcoin. Another way to do that comparison isn't just to put them right next to each other. It's actually to copy the Bitcoin fractal and paste it on top of the Dow Jones fractal and just use the fractal overlay to show the similarities. So let's do that right now. And if you take this tool and kind of play around with it just a little bit, it takes a little finessing sometimes to get it where you want it to go. Look how similar that is. It's so similar to what happened to Bitcoin. I mean, the COVID drop right here, you know, look, here's the COVID drop, here's the midway cool off, here's the first sell off. It's so similar, the Dow Jones and Bitcoin in 2017. And so that's why I believe the Dow Jones can easily run to 70,000 before it tops out, and the crypto markets can follow it in its parabolic run. So now let's talk about the bars tool pattern, or not the bars tool, the Gone box. Yeah, Gone box. So here's an example of when I was looking at some potentials for Bitcoin. Before Bitcoin went from like 105,000 back down to 70 and then all the way back up again, I was looking at this as a potential. And the reason I use the Gone box is to look at the geometry as well as the Fibonacci over time. So Fibonacci, in conjunction with time cycles, there's a relation between the support and resistance levels, the Fibonacci support and resistance levels, and the Fibonacci time cycles as well. And you can see here on Bitcoin, I was using the Gone box, measuring from the bottom here up to the top, right here, and I measured the 618 is where I placed this local high, and the 0.25 is where I put this first kind of sell-off, and the 50% is where I put that first, not first sell-off, this first little area right here before it pumped, and the 50% is where I put the first sell-off right here. And you can see just using the gone box to look at Fibonacci and price, and also being aware of a potential Elliott wave correction here. This was a potential that I had on Bitcoin during this period, and the gone box really helped me look at this potential and be aware of where price could go before a reversal. So that played out perfectly. You can see B wave topped out right here. Price came all the way back down to the 50%, not quite the 382, but almost to the 382, and then turned around. So an example of using the gone box in today, like what's happening right now, is go find something either that already went through a correction and look at the ratios. Like take a look at this right here, for example. Let's go to the 4-day time frame, and we'll take a look at, we'll grab our gone box tool. And by the way, WD Gann, I guess it's technically Gann. I don't know why I'm saying gone. His name is pronounced Gann as far as I know. WD Gann was a really cool guy. He was very smart. And if you want to learn and get better at trading and investing, go study WD Gann. He was a genius, and definitely somebody to be doing your research on. He turned, like, he made hundreds of millions of dollars in the stock market, and we're talking in the early, let's see, let's just look up how much he made. Let me get the numbers right. Maybe it was like 30 or 40 million. 50 million. Yeah, 50 million, not hundreds of millions. I was thinking 30 million, or I was thinking it was like 100 million, but then I was like, that's not right, because this was in the 1930s, so, or the 1900s. So really what happened was, in today's money, it would be worth hundreds of millions, but he made 50 million in the stock market, and he had a 92.3% success rate, and this was confirmed by like news companies and people that actually came to interview him and studied him trading, and actually confirmed that WD Gann had over a 92.3% success rate. Really smart guy. Definitely somebody to study. So the Gann box, I guess, very, very valuable to study and to understand. And the way that I like to use it is I'll find a local bottom, and then I'll go and I'll try to find the local high, and I'll measure that local high with like the 50% fib. So here you can see what I've done. Let's just line this up a little bit better, like maybe like right here. And there's the 50% right there. Here what I've done is I basically measured from the peak low to a peak top, but instead of putting instead of putting this part right here, the number 1 up here in the top right, instead of putting it right here, I put it all the way to where the 50% is lined up with the top. And this is the same thing I did over here, right? You can see the 50% was lined up with this peak right here. And the reason I do that is because whether the correction has happened or whether I'm expecting a correction and looking for time and support levels to map up with that correction, it gives me price into the future, right? Instead of just stopping right here, the box, instead of just stopping like it would if I had it right here, if I measure it with the 50%, it gives me an idea of what could happen in terms of Fibonacci and support levels and Fibonacci time cycles in the future. And you can see that when I do this, it gives me not only some pretty important Fibonacci levels to look at for support and resistance, like here, you can see these support levels on the Fibonacci, but also some important time cycles to be aware of. Like the 382 ended up being the top right here. The 25 was pretty close to the bottom right here, not exactly. The 618 was pretty close to the bottom right here. You know, the 0.75 was pretty close to the beginning of the new uptrend. So it gives you time cycles and Fibonacci ratios that are important to use and helpful to understand in the market. And you can do this anywhere in the market. If we go over here, you know, and we pull up Bitcoin, we go from our peak low over here on Bitcoin, then we line it up with the 50% level. Same thing again. You're going to get your Fibonacci ratios, this important support levels, important resistance levels based on Fibonacci, but you're also going to get some interesting things going on with time as well. In this case, let's see if we can line this up a little bit better here. Sometimes if you go to the log chart, you can get you can line it up a little better, then you can move it back to the linear chart later. So let's go like this. There we go. And then let's put this right here. That looks a little bit better. Now let's switch back to the regular linear chart. And now you can see that this 0.7, not every time cycle is going to be important. See this 382, that lines up with the beginning of the bull market, but there wasn't any big correction or anything right there. The 0.25, there was a pretty big correction right here if you zoom in. The 618, this kind of was the early signal for this correction right here. And the 0.75 ended up being the exact top of this local high, along with the 618 Fibonacci being the local peak as well, right here. And then the 0.25 ended up being the bottom of our local support right here. So the Gone box is very useful for studying Fibonacci in relation to Fibonacci time cycles. And a lot of times I will use it in the short term, as you can see, not like the 15-minute, but the 1 day. And you can see that we pulled back a little bit here based on our Gone box, right back down to the 50%, almost to the 382. So it was a very, very useful kind of tool in that case for looking at where the market could bottom out, where the correction could be over. And let's say that Bitcoin, for example, let's say Bitcoin rallies all the way up to 400K, just in the bigger picture, right? So let's pull up the 8-day candlesticks, and let's say Bitcoin goes all the way up to 400K in the bigger picture here, just as an example. Okay. Then what you can do is you can grab the Gone box and you can go from our peak low all the way up to the 50% Fibonacci, and that's where you'd line up our top, and you'd be looking, okay, well, Bitcoin's overvalued. It looks like it's ready for a correction, and you could be looking at this for where you're looking for support levels, and also where you're looking at potential areas where the market sees local tops based on time. So a lot of times you will get time and Fibonacci lining up for local peaks. So it's really useful for looking for areas of support and areas of timing based on the Gone box. Because W.D. Gann believed that time and price, there's a significant relationship between Fibonacci levels over time and Fibonacci levels over price, and that those are connected in a meaningful way. There's a geometric connection. So that's why he invented the Gann box and why he was so interested in time plus price and their Fibonacci relations. And there definitely is a relation if you do your studying on it. There's some really cool relationships there. Okay, cool. Thank you guys for tuning in. I love you. I appreciate you. I'd love to keep streaming, but I got some stuff to do today, and I'm already an hour and 14 minutes in. So thank you guys for tuning in. Look forward to seeing you guys in future live streams. Stay true to the bigger picture. I believe some big profits are coming for crypto. Don't worry about the news. Don't worry about the stuff happening in the world. We've got some big things coming for the crypto markets. And I look forward to seeing you guys in future videos and live streams. As always, stay profitable out there.